Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending November 11th, 2022. Looking at the market indexes for the week, the TSX, the S&P 500, Dow Jones, Nasdaq, and Russell 2000 were all up significantly for the week. Oil was down, but gold was up. We are concluding the Q3 earnings in the US, and we're in the middle of the Canadian earnings. And so far, the Q3 earnings have been okay, but sleepy. The earnings are holding up with 2.1% increases from the previous quarter, but at least they're not going down. Q4 earnings are looking like they are turning down as well. We had a couple of big events. The first was the US elections on Tuesday. Elections generally have no impact on markets in the long run. It's the valuations that do. Democrats are better for the markets than the Republicans, actually, which is counterintuitive. The Dow Jones Industrial Average tumbled more than 600 points after a Republican sweep failed to materialize on Wednesday, and control of Congress remained unclear. A split and gridlocked government is preferred by the markets because it's one less thing to worry about, and it means that nothing significant, especially no significant spending, will happen for the next 2 years. The danger is that there will be issues raising the US debt ceiling, however. And the second big event for the US was Thursday's CPI data. There was a lower core, and overall consumer price index was lower than expected, and initial and continuing jobless claims were higher than expected, indicating both inflation and the economy respectively are slowing down. So the future interest rate increases will be less and could slow and stop earlier. Wage inflation is slowing down also, which will help with inflation. It's likely we've seen the peak inflation in the US. The markets liked all of this very much on Thursday because the economy won't slow down as much, labor won't keep getting more expensive, and the company debt won't cost as much to carry. Because of this CPI read, the US peak interest rate projections have been downgraded from 5% peak to 4.75% peak. And the market took off as a result, and the US dollar went down, and mortgage rates in the US are back under 7%. Let's quickly go over the results. So looking at the US continuing jobless claims, the expected was 1.475 million, and the actual was slightly higher with 1.493 million. Initial jobless claims expected was 220K, the actual was 225K, so also higher than expected. The core CPI month over month for October, 0.5% was expected, and they got 0.3%. The year over year core CPI expected 6.5 and got 6.3, so better than expected. And the overall headline CPI year over year expected was 8%, and they received 7.7. And finally, overall CPI month over month expected was 0.6%, and the actual 0.4%. So the US Fed is determined to see inflation recede, and we're likely going to need more than one good report to convince them of this is in fact happening. However, they may still be willing to watch whether improved inflation trends persist. Because of this, while we still expect the Fed hike rates 0.5% in December, perhaps entering the fine-tuning phase of interest rates, and the continued evidence of disinflation may allow them to slow the pace further to 0.25% in February and then pause. The good news for investors is that the inflation tide is now going out and is becoming less supply issue driven and more driven by what the central banks can control. However, before we rejoice, there is still a question of whether the Fed allows policy to do its work or pushes the economy into a recession to combat an inflation problem that, based on this report, is receding on its own. There is another CPI announcement just a day before the next US Fed interest rate decision in December. The hope is that the data will continue downtrending inflation in December. Turning to Canada, as per a Globe and Mail study, insolvencies in Canada have spiked as pandemic financial supports dry up, while high inflation and interest rates take hold in the Canadian economy. New data suggests consumer insolvencies rose 22.1% in September compared to a year ago, and 22.5% in the third quarter compared to 2021. On the business side, insolvencies climbed a whopping 37% in September. Insolvencies are still lower than pre-pandemic, however, just heading upwards. Let's take a look at some of the details of the job market in the US. The first major headcount reduction at Facebook parent company Meta started as early as Wednesday. 11,000 employees were affected. At the end of September, the company had more than 87,000 workers. Twitter layoffs began last week as well. Anecdotally, big companies are stopping additional hiring or reducing headcount, but apparently not as much as to increase the unemployment rate significantly so far. There are layoffs or hiring freezes at Amazon and Lyft as well. Putting a spotlight on Disney's earnings report on Tuesday, it disappointed in just about every way. Profits missed Wall Street expectations by a wide margin. Revenue fell short too, dragged down by soft performance by the company's media and entertainment segment. Even the silver linings were offset by gray clouds. Disney Plus streaming subscriptions topped expectations, but its high costs ate into the bottom line, and the company expects growth to slow in the current quarter. Disney's Parks and Cruises segment posted record revenue, according to CEO Bob Chapek, but even that didn't live up to analyst projections. Turning to China, the Chinese lockdowns continue to affect US companies' supply chain, specifically Apple's iPhone production. Other news from China includes China retreating with new, later climate emissions deadline for building materials. Turning to next week, companies reporting on Tuesday, we have Walmart, Home Depot, which is a real estate bellwether. On Wednesday, we have Nvidia, Tencent, Lowe's, Target, Loblaws, and Baidu. And on Thursday, we have Alibaba, Palo Alto Networks. Economic events next week. On Tuesday, we have the U.S. Producer Price Index. On Wednesday, we have the Canadian housing starts and the all-important Canadian CPI, with a 6.9% year-over-year increase in the Consumer Price Index. And on Thursday, we have U.S. housing starts and U.S. initial jobless claims. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.